This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead. With insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City. There's a lot going on once again. It is Thursday, March 12th, and we're just about 2 hours away from that closing bell on Wall Street. Tim, we've got a market where we're seeing stocks under pressure. We've got U.S. Treasury yields moving up again. We've seen WTI crude, I'm just looking at that right now, up as much as 11% right now, up about 8%.
And if you look at Brent, up close to $100 per barrel. That's at $99.63 right now. That's another 8.3%. Both of those, Carol, year to date, up more than 63%.
Yeah, what a run.
And that drives the equity trade.
Absolutely. Well, the thing is, right, it keeps kind of sparking concerns about inflation, inflationary pressures, higher energy prices, right? That trickles through throughout the economy. I know the team on surveillance on radio continuing to talk about the gas prices as John Tucker fills up at the tank. I mean, we are seeing it and feeling it right away.
Well, traders no longer fully pricing in one Federal Reserve rate cut in 2026. More broadly, global bonds surrendering their 2026 gains, the dollar rising to an almost 2-month high. It's a lot, Carol, and Charlie Pellet's going to have more for us in just a minute.
Yeah, we're going to talk about all of this over the next 60 minutes. We are going to get the latest from our live blog on the war, where we are. No end in sight. It feels like we've heard from Iran in terms of a statement. We've heard the president out on social, so we're going to bring it all together for you.
Also, on the bond story, we're going to be speaking with Jason Greenblath, Senior Portfolio Manager and Director of Corporate Credit Research for American Century Investments. He's stopping by a little later.
Yeah, we've seen some interesting moves when it comes to global bonds. We've also seen lots of big issues, like anybody notice Amazon this week? Holly Shelton also is going to be with us. We're going to talk about the wellness market. She's Oura Chief Product Officer, really getting into how technology may impact our world more broadly when it comes to wellness, but also specifically when it comes to women.
All right, looking forward to that conversation and more over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the today's trade and top business stories. Here he is, Charlie Pellet.
Responding to an active shooting at Temple Israel in West Bloomfield, Michigan. Now, Michigan State Police say the incident is ongoing. A sheriff says security at the synagogue near Detroit engaged in gunfire with at least one person. WDIV-TV reporting that a truck crashed into Temple Israel in West Bloomfield Township. AP says no deaths. AP also says a suspect is at large. Again, developing story. We'll pass along more details as they become available. The Dow, the S&P, NASDAQ all in the red as we saw another spike in crude oil today. As Tim mentioned at the top, West Texas Intermediate crude up 7.7%, $93.99 a barrel. Brent, the global benchmark, now at $98.67, up 7.3%. We did see Brent crude trading above $101 a barrel. Bottom line here, oil higher, equities lower. S&P down 78, down 1.2%. Dow Industrials also down 1.2%. The S&P, by the way, down 78. NASDAQ, the composite index, down 1.4%. The VIX just below 26 now, with a 10-year at 4.24%. Gold is down 1.3%, $51.09 the ounce. And West Texas Intermediate crude trading higher now by 7.7%, 94 even a barrel. Oil majors surging today. ExxonMobil up 1.7%. Chevron up 3.1%. ConocoPhillips up by 2.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. We'll stay on the markets for you as we count down to the close on this Thursday. In the meantime, the Trump administration plans to issue temporary waivers for a century-old maritime law requiring American-built ships being used to transport goods between U.S. ports to stop surging oil prices. We've had that come out. We've also heard that the U.S. Navy could start escorting tankers through the Strait of Hormuz by the end of this month. That came from Energy Secretary Chris Wright. Tim, that was on CNBC.
Meantime, crude hits $97 a barrel. WTI Brent hitting $100 a barrel amid weakening shipment disruptions, with Iran's new supreme leader, Ayatollah Mojtaba Khamenei, signaling no intention of ending the Strait of Hormuz closure, specifically saying, quote, "The lever of closing the Strait of Hormuz must certainly continue to be used." Studies have been conducted on opening other fronts where the enemy has little experience and would be highly vulnerable, and their activation will take place if the state war persists.
Now, Iran seems to be doubling down when it comes specifically to holding on its hold, really, on global energy markets and the global economic leverage that it has as a result of that. Meantime, we've had President Trump out today on social saying a few things, but he also said the United States is the largest oil producer in the world by far. So when oil prices go up, we make a lot of money, but of far greater interest and importance to me as president is stopping an evil empire, Iran, from having nuclear weapons and destroying the Middle East and indeed the world. I won't ever let that happen. Again, this is coming from President Trump earlier today on social. So where are we? With more and back with us and looking at the war through that geoeconomic lens as she does so well is Bloomberg Economics Chief Geoeconomics Analyst Jennifer Welch. She joins us from our Bloomberg DC Bureau. Jenny, good to have you back. First up, timeline. Seems like there's no end in sight if you look at kind of what we're hearing from both sides, meaning the U.S. and Iran. Is that true? Is there anything going on behind closed doors that we need to know about, or what we see and what we've laid out, Tim and I, that's pretty much it right now?
Yeah, I think as you mentioned, the timeline here is very uncertain, and a lot depends on what the U.S. and Israel would consider to be achieving their war aims and therefore giving them the opportunity to seek an exit ramp. I think President Trump has started to signal he is looking for it, but really the key question is, what is he willing to offer Iran in terms of assurances that would lead them to be willing to accept it, and would Israel go along with it? And at this moment, it's very hard to say, even though we're 13 days into this conflict.
We've heard, Jenny, that over and over again, that the U.S. government had wanted to remove the Ayatollah. And now with the Ayatollah's son in power, I wonder if there's any difference in not necessarily the form of government, but the government's view of the United States. And if that means that if he's in power, that will be a barrier to the president ending this war.
I think certainly what we can expect, and this may not be just about the individual, but the broader system that he represents, that after the U.S. and Israel struck Iran, that there is going to be more of a hardline position towards the United States, that some of the negotiations that were happening prior to this war, it's harder to imagine those restarting in the wake of it, that Tehran's just going to be far more suspicious of U.S. intentions going forward because of the fact that they were negotiating when this war broke out. And if anything, this may have convinced them that they need a nuclear deterrent in order to really be able to rely on their own security.
Yeah, it does make us wonder, and I know we've heard some conversations on Bloomberg today about, have we created perhaps an enemy or an entity, Iran, that whether it's 3 years, 5 years, 10 years, when the rebuild is done, do they just come at the United States with a vengeance?
I think there is that risk, but I think it's a present risk. And I would offer, and I think to a certain extent the Trump administration is right on this, that it was a risk beforehand, right? That even though there were negotiations ongoing, the United States and Iran certainly weren't partners. They were not friends. Their interests were quite divergent, and there were a lot of ways in which Iran was rebuilding the capacity to pose more of a threat to the U.S. But certainly after this war, regardless of how it ends, I would anticipate that Tehran will double down on those efforts. And not just, by the way, with the nuclear weapon front, but also on the proxy front and the ability to stage attacks abroad, which may be what the Supreme Leader was hinting at in that very ominous statement.
Hey, Jenny, last 30, 40 seconds. The problem of the U.S. war in Iran, is it growing in terms of its impact on the U.S. economy, the global economy, or are we still kind of in a wait-and-see mode?
The longer this conflict goes on, the bigger the hit will be to not only the U.S. economy, but the global economy, and the more markets will be nervous that these disruptions aren't temporary.
All right, going to leave it on that note. Hey, listen, thank you again. I know there's a lot going on over there in the D.C. Bureau, but you're keeping us up to date on it all. Jenny Welch, she's Bloomberg Economics Chief Geoeconomics Analyst. All right, from the war, which is definitely top of mind to investors, we got to talk global markets. Yeah,
with us, Skylar, Weinard, Chief Investment Officer at Regan Capital. It's got $3.9 billion in assets under management. Skylar joins us here on set in the Bloomberg studio. Good to see you, Skylar. We got to start with the war. You just heard the conversation we had with Jenny. What is your base case for how long it lasts? Your base case for oil this year? The two obviously linked, and look at the equity market and what the equity market has done over the last 2 weeks. What are your base cases on both of these things?
I think best case scenario is 6 weeks. So base case has to be 3 to 4 months.
Wow. Okay. So I'm just processing that.
Right.
6 weeks of what we've seen over the last 2 weeks, roughly, if it goes 3 or 4 months, what does that end up looking like? Is it airstrikes? Is it something that, I mean, the president has not ruled out any sort of additional measures, I guess you could say.
Yeah, I think Iran is almost entering like a Vietnam guerrilla war, where they're talking about, hey, we're going to go after ships in the Strait of Hormuz.
Right.
We're going to start. We just launched a torpedo for the first time in 50 years. Yeah. And so we're dialing back the clock here in terms of how we're doing warfare and how Iran especially is doing warfare, and they're not going to give up. But you look at Venezuela, you look at Iran, we're talking about, taking over Cuba. What this does is it raises the cost of capital for U.S. investors and investors everywhere. So you're seeing, not only are you seeing that in increased commodity prices, oil's up to $95 again, and people are starting to get worried about inflation going back up to 3 to 4%, and they are going to start demanding higher returns for investing in U.S. assets. And in turn, interest rates go up, equities go down. So the cost of capital for all players involved is increasing with this uncertainty and tenure of this war.
There's so many places to go. I'm thinking about, if it's the worst case scenario, 3 to 4 months, so that takes us to either June or July. Sure. I'm just trying to understand, the mission in terms of, I guess, what the administration is doing, what this means for elections, and then maybe what this means longer term for the U.S. economy and the investment environment. Like, how far out do you feel comfortable talking about when it comes to the investment environment?
Tomorrow? What's going to happen today or tomorrow?
That's honest and fair, yeah.
Yeah, and so we like to stay super short. We like floating rate assets that are government guaranteed, floating rate, or very high certainty of getting paid back for now. We want to wait until the curve steepens out and you're actually getting paid to take on more risk, whether that's time or credit risk, right? So it's week by week at this point. Yeah. Bonds lost almost 1.5 points already this month. Bonds are back to flat. Equities are down 2 to 3% for the year. So everything that the government set out to do to start the year, which is lower mortgage rates, bring interest rates down, bring the 10-year treasury down, make things more affordable, they're not working. We're doing the exact opposite of what we wanted to do.
You bring up a good point, and I think that's a point that takes us to Washington, D.C. and to the politics of this. And it's a midterm year, and voters certainly have different priorities, but affordability was a key message for this administration. It's one of the reasons it took the House, the Senate, and the White House in 2024. Does this change your view for what happens in the midterms, and what are the economic implications of that?
For sure. And you're already seeing it in a couple of key races that we've seen. Texas, I live in Dallas, Tallarico getting the nomination, Marjorie Taylor Greene's seat, where Democrats outpaced Republicans in that district.
Right.
So I think the likely case is that, Democrats for sure take the House, and the Senate may be in play. But you're seeing this ebb and flow between the administration, and, Trump's a lame duck, right? Even though he's got 3 years left. And he's going to go back and forth internally with his team in terms of, I need to set my mark on foreign policy, or I really care about getting some things done in the last 2 years of my administration, and I care about having all three houses, or all, both houses plus the administration.
So then, maybe devil's advocate a little bit,
Sure.
Do we have a president who's actually thinking about what's better for the world longer term, and perhaps then, as a result, what's maybe better for the U.S. longer term? Or who knows? Like, I think, we go back to, Skylar, like, what is the mission of this?
Yeah.
Now, we've had guests, several, who've said this is long overdue. We know Iran has been a bad actor, does not like the United States. But I just do wonder.
And that seems to be a common theme from our guests.
Yeah,
over and over
it's
again
really,
they're saying that.
Right.
Yeah.
Kind of. So, like, is this actually a president who's maybe somehow, as much as it creates a lot of tension and volatility in the market, perhaps creating a better way forward for the world overall, and not thinking about the midterms, which would be something refreshing. Some would say that they're not watching elections. Members of Congress are probably watching the midterms very closely. So I'm trying to understand, like, do we get to a president that's actually maybe doing some smart policies? Like I said, maybe I'm playing devil's advocate a little bit here.
I think so, but they're missing the second order effect.
Which is?
Okay, we're going to take out Iran's leader. But Iran all of a sudden is entering an all-out war with the Middle East. And they're going back and doing some of these tactics that we're just going to take over the Strait of Hormuz. We're going to start laying, mines. And I don't know if you saw, we just decommissioned our only minesweeper. The United States did recently. So we don't even have a minesweeper to cure that. Does
it seem like to you, and we're sort of getting, because the conversation's just going this way, we're just bear with us, we're going there. Does it seem to you that the implications and the second order implications that you just mentioned were planned for with these strikes 2 weeks ago?
No way, no how. No way. Look at mortgage rates right now.
Yeah.
Mortgage rates touched 595. They're back up to about 630. Okay. When the administration announced that Freddie and Fannie were going to buy another $200 billion of mortgage bonds on January 8th, mortgage rates are higher. Mortgage spreads are higher today than they were the day before they did that. So everything that, if we're playing chess, I think Trump thought he was going to be able to take out the king and the game was over.
They didn't expect the fight back, I think.
Exactly.
Right?
Yeah, no doubt.
Maybe, Carol, just to your point, the success in Venezuela, maybe it gave some sense that,
too easy.
This will work.
But I guess, exactly.
Maybe.
But it makes me then a little nervous about, well, where was the intel on this, right? You do have allies in the region. You have Israel, right? So where, I don't know.
And it's very possible that if Israel wasn't involved, it wouldn't have gotten to this stage. But Israel actually did the attack. We provided the intel, and I think Israel may be a larger enemy in that area than the United States is.
So let's bring it back to investing and how you make these decisions in a world like this. Oil, triple digits, $118 per barrel earlier this week. How high could it get?
I think we've probably seen the peak in oil for a while. I think that was definitely a knee-jerk reaction of the market that, this is going to last forever. That comment that Trump made, this is great, we want high oil prices. No, we don't. Gasoline's already gone up 75 cents a gallon in the last 10 days.
Yeah. There's a reason fertilizer stocks and just all these different
bills,
things. And
it's not only oil, it's heating oil.
Yeah.
It's, gasoline, it's natural gas that are all crushing the consumer. And let's say we get a 3.5% inflation print here in the next 2 or 3 months. They're going to dial back the clock real quick, and they're going to want to say, "All right, we've had enough. Let's get out of this."
Skylar, just got 30 seconds.
Sure.
So I think in reading your notes, talked about keeping elevated cash levels.
Yeah.
Be cautious.
Oh yeah.
For investors.
Wait.
Yeah.
Yeah.
Okay.
You can make 5-6% yield in really short duration, high quality fixed income, and wait it out. When do you know the coast is clear? When the curve steepens out, when potentially lower interest rate or the front end interest rates come down, Welch gets elected. At that point in time, when you have a much steeper curve, it's safe to come out and take some risk.
Skylar, thank you so much. Skylar Weinard, Chief Investment Officer at Regan Capital. We do want to mention too, the alleged shooter has been found dead following the incident at the Michigan synagogue. So we continue to follow that story.
Yeah, check out the latest from that. Myles Miller reporting on this on the Bloomberg Terminal and at Bloomberg.com. You're listening to and watching Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A suspect is now reported dead in that Michigan synagogue shooting. That word from a law enforcement source. FBI personnel do remain on the scene after an apparent vehicle ramming at Temple Israel in West Bloomfield, Michigan. Now, Michigan State Police said the incident occurred midday. The Oakland County Sheriff said earlier that security personnel at the synagogue spotted the individual and exchanged gunfire again. Reports say the alleged shooter is now dead. Stocks lower as oil surges. A renewed jump in oil is stoking fears that the war in Iran will further crimp energy supplies. Brent crude at $99.83. Did see Brent trading above $101. Brent right now up by 8.6%. West Texas Intermediate crude $95.26 a barrel, up 9.2%. Stocks lower across the board. The Dow, the S&P, NASDAQ all in the red, approaching session lows now, with the S&P down 86 at 66.89. Drop there of 1.3%. The Dow down 652, a decline there of 1.4%. The NASDAQ Composite Index now down by 1.5%. The VIX just above 26 with a 10-year at 4.25%. Gold at $51.02 the ounce, down 1.4%. And again, WTI West Texas Intermediate crude $95.28 a barrel, up 9.2%. Brent, the global benchmark, now back above $100, $100.12 on Brent crude. Earnings news: Petco soaring after the pet and wellness company issued a better-than-expected forecast for the first quarter. The ticker is WOOF. Shares up now by 33%. Dollar General after earnings down 6.1%. Dick's Sporting Goods after earnings up now by 2.3%. And Netflix just announcing that K-pop Demon Hunters will return for a sequel. Shares of Netflix, they're up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It's K-pop's world, and we're all just living in it.
My wife was watching it last night while I was doing some work.
Have you not watched?
I have not seen it. Our youngest doesn't watch it, obviously, but our 7-year-old raves about it.
Really?
She's like, it's actually really good. Yeah. I haven't seen it yet.
All right, we're going to table that for a moment. We'll come back maybe later. Hey, we did want to just kind of set up our next segment, because just a day after U.S. corporate bond buyers lent the largest sum ever to America's companies, they quickly tightened the screws again as the war in Iran sent oil prices and credit risk gauges higher.
Salesforce drew tepid demand for a $25 billion bond sale intended to fund a share buyback amid lingering worries over the software sector's exposure to AI. By contrast, Amazon completed a 2-day $54 billion equivalent debt raise to help fund its AI build-out. That company also upsizing a Eurobond offering on Wednesday to 14.5 billion euros. It's around $16.7 billion US. That's just a day after selling $37 billion of bonds in the U.S. market. Is your head spinning yet?
A small little issue there.
Yeah.
All right, let's see what our next guest has to say about that and all the credit markets overall. With us is Jason Greenblath. He's Vice President, Senior Portfolio Manager, Director of Corporate Credit Research for American Century Investments, where he co-leads the corporate markets team. He's a member of the Global Fixed Income Investment Committee. That means he's kind of important. He oversees more than $40 billion in AUM in fixed income assets. American Century, though, has about $327 billion as a firm overall in AUM. Welcome. Nice to have you here.
Thank you for having me. It's great to be here with you.
You know, it's interesting, before we got started, it's been quite a week already.
I'm exhausted. Trying to catch my breath coming into the studio. We had a record day on Tuesday. The pipes are flowing in investment-grade credit.
Why?
Why?
Well, why in this environment?
I think this was well telegraphed. So investors were ready for this. If you look at the demand for the Amazon deal, how many times over was it subscribed? Yesterday, we had Salesforce. Again, oversubscribed. Everyone was waiting for this. I think everything else that's been going on, whether it's AI, private credit, high yields, et cetera, the war, that's all still going around, but the pipes are flowing.
Why is, though, investors like the comfort with all of this? Like, I thought, Salesforce was kind of an interesting thing, and this was to fund a share buyback. Was that the problem? Because I know when that headline crossed, when they were initially going to say that, we were like, what? This is what they're doing? Is it
because it's Salesforce and it's seen as susceptible to AI disruption?
Yeah.
I don't know.
How are investors kind of weeding through?
I think if you look at their business model, folks are concerned, right? The share price is down. It's down by, 30-40% from its highs. Like you said, share buyback, when you look at the leverage, the statistics, the credit metrics that we look at, doesn't look that bad. And then when you factor in the valuation that they printed at yesterday, it was coming at BBB minus levels. We have bonds in the market that much lower credit quality. This is single A rated today. Single A rated today, maybe it gets downgraded a few years in the future, but it's trading today as if it was already downgraded.
All right. So are you seeing any stress within the credit markets and the debt markets?
So the pockets of stress that we're seeing, again, I'm going to put the war aside because that's still fresh. Certainly BDCs, right? Business development companies, private credit. Can't turn on your Bloomberg terminal without seeing another headline of another fund seeing redemptions. That's certainly an area that we're very focused on and thinking about. Is there spillover? Is there spillover into CLOs, for example? Broadly syndicated loans, those go into CLOs. 2/3 of CLOs own that broad market. We're watching that very closely.
At what point would you be watching it and say, okay, yes, this is the official moment that there is spillover? What would you see that would cause you to say that?
So the redemptions that we're seeing in BDCs are one thing. Those are meant to be typically long-term investments where there are investors going in know that this is committed capital.
Yeah.
I think when you start to see the publicly traded instruments, high-yield bonds, high-yield leverage loans that are more in the public market, even though some of those companies may be private, that they were LBO'd.
Yeah.
When you start seeing large redemptions and liquidity events, that's when you say, oh, that's going to spill over, and that's going to become a bigger problem for the credit markets.
Jason, if we start to see, if we continue to see rates kind of stay where they are, even potentially trend higher, like I do think about the rate environment a lot, right? This is what we've talked about with private credit, that deals done in a low rate environment look good. And then, of course, when rates go higher, not so much. But if that rate environment, we continue to see rate pressures, do we start to see maybe more cracks emerge?
Yes and no. So the lower quality part of the cohort, those borrowers that really don't have a lot of cash flow, could be more susceptible. But I also think, why are rates higher? Are they higher because of oil and what's going on with Iran?
Yeah.
Or are they higher because we're in a growth environment? If growth is GDP is growing at 2-3% this year, I think these companies are fine. And what we're seeing, back to your question before, why so much demand? Yield. Yield is pulling in capital. Last Monday, so a week and a half ago, right after the war broke out, it was a nothing event. We call it a nothing burger. A nothing burger because spreads widened 5 basis points in investment grade. Yields were higher. It got bought. Monday was a day of discipline. It wasn't a day of opportunity.
So, go ahead, Carol. You were talking a little bit about how things have changed in the last few days, and if we think about the effect on consumers, the effect on the economy, I wonder how higher energy prices, gas prices up to $3.60 a gallon nationally average, up from $3 just a little more than a week ago. Heating oil hitting $5 a gallon. If that hits consumers, what does that do to the U.S. economy?
It's the duration. How long does this last? It's going to hit consumers. It's already, my 82-year-old mother is asking me the same question. How long is my gasoline prices or my food prices going to be?
What did you tell her?
Higher? I said, well, let's see how long this lasts. If we have resolution in a few weeks, okay, that may not hurt you. But also keep in mind, we have seasonality to oil and gasoline. There's a summer blend.
Right.
Typically, we go higher as we go into the summer anyway. Question is the duration. How long does this last? How quickly can we get resolution? We had the discussion earlier this week about the duration, the impact of oil prices. We're certainly not making a prediction on the duration of what's going on in the Middle East, but certainly thinking about the strategic reserves and the release, it doesn't really unclog the situation in terms of prices.
Right.
It's not enough. It's only a handful of days worth of supply, and that's not going to, in our minds, reduce the price.
It gets back to the big question. Our last guest said best case 6 weeks, worst case 3 to 4 months. That was his view. Do you have a best and worst case when you think about this environment and how long this goes on?
We're not that good to on the politics side to say it's going to be in this time frame. What we can do is to stress test and say these are the sectors. The consumer is going to be under pressure. We know. Let's be careful, confident, re-underwrite our credits, our borrowers that we own.
Yeah.
And if it goes on longer, who's next? So we know where the bullseye is, the center of the fallout, but let's think about the second and third order magnitudes.
I am also curious, we had a story that said how U.S. borrowers, in fact, are rushing to take advantage of the still open capital markets before things potentially turn worse should the war escalate and oil prices increase further. Again, it's like the time we have to figure this out. Are you seeing that again? Like I think about what happened in the last week or so, or just even this week, about issues coming to market. Are you continuing to see that or expect that? Where it's
the lowest quality part of the credit markets where there's some pause. So think low single Bs, triple Cs. Those were companies that probably needed to restructure anyway. I think when you look at the broadly syndicated loans, leverage loans, or even private credit, those are companies that tend to be smaller. Do they need access to capital? Not today. And we haven't talked about software. How about the software sector? Where does that spill over?
Okay, perfect segue. That's exactly what I want to talk about. Salesforce drawing that tepid demand for a $25 billion bond sale, perhaps lingering worries over the software sector's exposure to AI. How do you view how vulnerable that entire sector is to just how quickly things are moving forward when it comes to this tech?
You just said it. How quickly? So does it become an issue in months or years?
I mean, the development of this is so quick. Yeah. It's mind-blowing.
That's right. And there are stories, there's research out there talking about default rates at 15%. One of your colleagues had on earlier the CEO of Hamilton Lane. Mm-hmm. And I thought what he said was really interesting. 15% default rates is eye-opening. Is that cumulative or is it all in 1 year? Right? Does it happen instantaneously or does this happen over several years?
Right.
Think back to the financial crisis, the high-yield market. We had default rates peak in November of 2009, right? So even after we said there was the bottom in the market, that was less than 15%. So we're calling for, does it happen all at once? We don't think so. Does it happen cumulatively over time? It's too early to say. And then we think about the maturity profiles of those companies that may be in the center of the software bullseye. Those maturities are 2028, 29, 30. Why would they come to the market today when investors are running for the hills and making redemptions? Maybe they can wait till 2027 or 28 to address those maturities when we have more information.
So what's your advice to investors in this environment? Our last guest was more like, play it safe, more cash, like be careful. And that was certainly talking about from the equity side and some different. How do you guys see it from the debt markets?
Yeah, so I would call it as this. We want to be nimble, meaning that you have liquidity. You want to nibble, but don't feast. This is not an environment when you look at broad index spreads. They're not screaming cheap. We're still at generational tights, 30-year tights in a lot of parts of the market, whether it's IG, high yield. I think you want to be really selective, and I think you want to trade this market. This isn't one where we want to buy a 30-year fill in the blank from the last week or two of new issuance and hold it for 30 years. We're gonna take that concession, bonds that come cheap, let the spreads compress, sell them, and reload when there's a better opportunity.
I think we have to wrap. I know you both I had a question.
It was just about Penn State. It's okay.
Jason Greenblath, VP, Senior Portfolio Manager, Director of Corporate Credit Research for American Century. Thank you so much. Really appreciate it.
All right. Very briefly, just a headline crossing the Bloomberg terminal. The alleged shooter is dead following an incident at the Michigan synagogue. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with an update on the shooting at a Michigan synagogue. A suspect was killed after ramming his vehicle into the front doors of the synagogue in suburban Detroit and opening fire, setting off an exchange of gunfire with security officers and then a large police response. Now, authorities say the man drove into Temple, Israel in West Bloomfield shortly after 12:30 p.m. That, according to the Oakland County Sheriff, security personnel confronted him and returned fire. Authorities now say the attack is being investigated as an attempted vehicle-borne explosive attack after explosives were found in the back of the man's car. Stocks are trading lower as oil surges. Right now we have got Brent. It did touch moments ago briefly back above $101. It is up 9.5%. Brent currently trading at $100.74 the barrel. West Texas Intermediate crude at $96 a barrel, up now by 10%. Equities lower. The Dow, the S&P, NASDAQ all in the red. The S&P is down 89, down 1.3%. We're seeing the Dow down 681, down 1.4%. The NASDAQ Composite Index down 354. For NASDAQ, a drop of 1.6%. The VIX above 26 with a 10-year 4.25%. Spot gold down 1.5%, $5,099 the ounce. And West Texas Intermediate crude up 10.1%, $96.11 a barrel. Brent, a closing in on $101 once again. The cost of plane tickets may jump as much as 9% as oil prices in the Middle East soar. That, according to Willie Walsh, Director General of the International Air Transport Association this morning. Air France KLM said it was raising long-haul ticket prices by 50 euros, about $58. That beginning today. Among U.S. carriers with long-haul routes, United down 4%, American Airlines down 4.2%, Delta right now lower by 2%. Recapping, stocks lower, S&P down 1.2%, West Texas Intermediate crude above $96 a barrel, higher by 10%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that. We just want to go back to something Charlie just mentioned, and that was a man was killed after ramming his vehicle into the front doors of a synagogue in suburban Detroit and opening fire this afternoon. The attack is being investigated as an attempted vehicle-borne explosive attack after explosives were found in the back of the man's car.
No other injuries were immediately confirmed. Investigators are working to determine whether anyone else was involved. Multiple law enforcement agencies, including the FBI, responded to the incident at the temple. It describes itself as the nation's largest Reform synagogue. We should note that by mid-afternoon, officers from multiple agencies had surrounded the property. Medics and tactical teams were on scene. Investigators were working to determine more from one person who was involved, and we're trying to obtain surveillance video from the area.
I should also point out law enforcement really across the United States has been on heightened alert for potential attacks since the end of last month after the U.S. and Israel launched a military campaign against Iran. Right now, for those who are watching on YouTube and, of course, on television and Bloomberg Originals, that is a live shot of West Bloomfield, Michigan. So we will, of course, continue to monitor and bring you any headlines as they come across the Bloomberg.
Yeah, Michigan Governor Gretchen Whitmer described the news as, quote, heartbreaking, and said the state's Jewish community should be, quote, able to live and practice their faith in peace.
I got to say, with all this going on, Tim and I were just saying, it's just, a lot coming at individuals, a lot coming at investors, a lot coming at the world at large. We think a lot about our health, our wellness, and that's kind of where we want to go right now. It is time now for Business Week's Women's Health segment. We do focus on key issues and developing technologies impacting the present and future of women's health around the world. It's not always easy when we are seeing images like that, and just reminded that there's a lot of stress around the country and really around the world.
We welcome Hallie Shelton, Chief Product Officer at Oura Health. She joins us from San Francisco. She was former global product lead for MacBook Pro at Apple. Before that, she served as CEO and co-founder of Move With. It's a fitness and wellness platform connecting people to guided fitness and meditation classes. It ultimately was sold to Under Armour Connected Fitness. Good to have you on the program. We talk about technology and healthcare converging, and especially with consumer products that increasingly offer things that we used to only be able to get in a clinical or medical environment. How do you view the layering of AI onto this data in order to deliver actionable results to people?
Yeah, hi. First, thanks for having me. It's great to be here. When we think about wearables today, this is the first time where we've had these products. You've got this Oura ring that's on you 24/7, continuously measuring you. And so the way that we think about how AI is adding on to this is twofold. One, providing that deep machine learning, the detection, the prediction, the understanding that allows us to translate these signals into something that we can understand and act on every day. And the second is through all of the new LLM capabilities that allow us to take and extend that translation into a conversation to help make health a daily practice, something that we incorporate into our everyday as a back and forth conversation. So we're now moving from something that was like a tracker to truly this proactive health companion.
Holly, how do you think about the balance? And we think about this a lot, and you are kind of starting to see a pushback, whether it's, dumb phones for kids rather than smartphones, but this balance of having technology that is so much a part of our life, but not having it consume us. And that goes into the wellness and health space as well. So how do you guys think about it at Oura?
Yeah, we think about this a lot at Oura. We think a lot about what we internally call quiet technology. And so we really believe that, especially when it comes to wearables, that this should be a product or something that you can put on your body and almost forget about. It should just be there when you need it and out of your way when you don't. So we have a product we think a lot about wearability. This is something that you can put on. It's super comfortable. It's incredibly accurate, has a long battery life, and it's just always there, measuring you, giving you insight when you need it. But it's not going to beep at you. It's not going to buzz at you. It's not going to take attention. Instead, we're thinking a lot about how do we connect you back to yourself.
And, I will say, though, when it comes to technology, I do think about it, though, as a plus for women, where we've had a lot of conversations in this segment about women's health. Research has lagged. You often have members of the medical community that are dismissive about various issues for women. And how do you guys think, though, specifically about the opportunities when it comes to women and technology and health and wellness as really maybe a big opportunity?
Yeah, like you said, this is a group of people who have been under-researched, underfunded, often kind of reduced to reproductive health as what we think of as women's health. But at Oura, we're trying to make health a daily practice. We're trying to move the needle on proactive and preventative health. And we do that by giving everybody a voice so that they have the agency to live better. And for women, we can't do that without deeply understanding their unique physiology at every phase of their reproductive cycle. And so women's health is at the forefront for us. We start almost everything that we work on, starting with women's bodies, deeply understanding that. And we feel responsibility to do better here.
I'm wondering, I have an Oura ring. I'm wearing it right now, and one thing that it does tell me, and it knows me to a certain extent. And if I don't get a good night's sleep, it knows that I'm a parent and have kids, and it says like parenting is hard, and sort of customizes this message to me. What does it do differently for a woman if she were to have sort of the same sleep score, the same activity score? Like, what are the differences that happen behind the scenes that present those actionable insights?
Yeah, we obviously, like women, we don't think of our health in silos. And so we've built a collection, a suite of features that start at period onset, that go into contraception and just overall cycle insights that are there with you during pregnancy and into perimenopause. And so as we think about that daily health that you're talking about, when you wake up with your sleep score and your readiness score, we understand exactly where you are in your cycle, if you're in your luteal phase or your follicular phase, if you're pregnant. And so the insight messages that we give to people are all in context of where they are in their cycle.
Hey, just got about 25 seconds. Any new rings launching this year? We watch really closely. And if you could just be quick.
Can't share that, but we're working on some really exciting things, so stay tuned.
Holly, come back when you, we'd love to hear more. Let's stay in touch. Holly Shelton, she is Chief Product Officer over at Oura Health, joining us from San Francisco. All right, folks, we're going to get an update on what's been going on in Michigan. We'll take you to that and look at the latest headlines there.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are coming up on the last hour of trade on this Thursday. Just a quick recap of where we are in the trade. We are seeing some pressure in terms of equities, down 1.3% on both the S&P 500, the Dow Jones Industrial Average. NASDAQ 100, Tim, right now down about 1.5%. WTI crude continuing to rally in the Thursday trade.
Yeah, more than 10%.
Yeah, so we've definitely seen a move to the upside. And if you move it on over in terms of yields, we've definitely seen also a move up when it comes to U.S. Treasury yields. Right now, a 10-year note with a yield of 4.25, and I'm looking at a 2-year note with a yield of 3.74. Don't forget, we get to read a closely watched inflation print by the Fed. We get that tomorrow at 8:30 a.m. Wall Street time.
Yeah, I'm just taking a look at oil prices right now. You mentioned they're higher, again, marching higher. WTI up more than 10% today. Brent up more than 9%. Year to date, both of those up more than 65%.
All right, we're definitely tracking the markets for you. We're also watching a story out of Detroit as a man was killed after ramming his vehicle into the front doors of a synagogue. This was in suburban Detroit and opening fire earlier this afternoon, setting off an exchange of gunfire with security officers and a large police response. This, again, is from authorities who've been on the scene. With more,
Myles Miller, he's Bloomberg News senior reporter. He covers Homeland Security and the FBI. He joins us from New York. Myles, what more can you tell us about this breaking news situation?
Yeah, 12:30 Detroit time, a man drives his car into Temple, Israel, which is a synagogue and a school, massive facility there in the suburbs of Detroit, and drives down the hall of this building. He strikes a security guard, and that's when he's engaged in gunfire by that security team. What we're told is that the suspect was found dead in his vehicle. It's unclear if it was the gunfire from security or if it was self-inflicted. And what's happening now is that there is a sweep of that suspect's vehicle for improvised explosive devices. The belief here by law enforcement on the scene is that this may be a vehicle-borne improvised explosive attack. There was a number of police on scene from the ATF, local police, and the state. In addition to that, when this car crashed into the building, something inside that car ignited, causing a fire in that building. What's most important is that a security guard is injured, but none of the students in the school were injured.
Myles, I think in a situation like this, in an environment like this, where there is the U.S. involvement in the U.S. war in Iran, the question that has, especially after law enforcement in some areas of the country have been warned about potential, quote unquote, sleeper cell activity, is there perhaps at this point known to be any connection between what's happening in Iran and this attack?
Yeah, that's being probed right now by investigators to figure out what the nexus of all of this was. We had a terror incident here in New York City that was unconnected to what was going on overseas. But, we have seen a number of anti-Semitic attacks throughout the country, whether it be here, whether it be in Colorado, Tree of Life in Pittsburgh. This has been going on for years. And so there will be work to figure out if this was just a case of anti-Semitism or connected to something larger. But it's something that the police departments across the country are very mindful of. Here in New York, they're going to be stepping up security at synagogues and other houses of worship to make sure that people here feel safe.
What's the national security threat at this point? I actually felt like I noticed more police at our subway station here in New York City, but that might just be random. But I'm just curious, what are we hearing in terms of being on alert, or if we have a heightened security alert here across the U.S.?
Right. We haven't heard anything about threat levels being risen, but here in New York specifically, there has, since the incident happened in Iran, the strikes in Iran, there's been an uptick in security, a heightened presence and posture around the United Nations, around sort of high security targets. The Hercules team, which is a team of 5 vehicles, heavy weapons teams, K9, still making their trips throughout New York City, all out of an abundance of caution. But, then we're seeing some of these bulletins that are going to police departments across the country to tell them to be on alert for folks who may want to do inspired attacks, right? Lone wolf folks who may be, agitated by what's going on in the Middle East and seek to do something here. It's what we saw, in the wake of other incidents that have happened, and it's something they're certainly mindful of right now.
Myles, we're going to have to leave it there. That's Myles Miller. He's senior reporter who covers Homeland Security and the FBI. Myles, we'll sure to bring you back with any other headlines, and we'll bring all of you the latest on this shooting.
All right, we are watching the markets as we get ready to wrap up on the first hour of Bloomberg Businessweek Daily. One thing we do want to bring your attention to, and we did see a headline cross the Bloomberg terminal, Brent crude settling above $100 for the first time since August of 2022. We have seen tremendous moves when it comes to the energy markets, oil specifically. I'm just looking at WTI crude for that matter, and that is up almost 70% year to date, up another 10% in today's session.
That's going to be a big topic of what we're spending the next hour talking about on Bloomberg Businessweek Daily. We're going to be joined by Professor Rocky Weitz. He's of the Tufts University Fletcher School of Law and Diplomacy. He's professor of practice and director of the Maritime Studies program. We're talking the Strait of Hormuz. We're talking the Jones Act, and whether or not that will actually move the needle when it comes to oil prices. That's coming up next on Bloomberg Businessweek Daily.